Get ready because the news cycle is moving at lightning speed, and you're about to catch up with Qualcomm Pulse. We're diving headfirst into the stories that matter, the updates that are shaping the future, and the insights you won't want to miss. From critical market shifts to groundbreaking industry collaborations, we've got it all. Don't blink, because the next big thing is happening right now, and we're here to break it down for you. We're kicking things off with a look at the very latest financial signals surrounding a tech giant, exploring what they might mean for the market. Then, we're shifting gears to a major partnership that's set to revolutionize an entire industry, bringing next-generation communication to a vital global network. After that, we'll unpack the latest movements from key investors, dissecting subtle shifts that could signal bigger trends. And finally, we're hitting you with an update that hints at significant strategic realignments within a major player, driven by powerful new forces. It's all here, it's all now, and it's all on Qualcomm Pulse. Make sure you're locked in, because you won't want to miss a second of this. Hit that subscribe button and ring the notification bell so you never miss an update. Market signals sound alarm. The latest financial data paints a complex picture for a major technology player, with a recent stock analysis flashing a cautionary signal. While fundamentals appear mixed, the market is reacting to subtle indicators that demand a closer look. This isn't just about daily fluctuations, it's about understanding the undercurrents that can shape long-term investment strategies and corporate direction. The outlook suggests a period of careful navigation, where discerning investors will need to weigh various economic factors and company performance metrics to make informed decisions. The core of this analysis centers on Qualcomm's stock performance and its underlying financial health. Recent reports indicate a mixed fundamental landscape, prompting a cautionary stance from market watchers. This suggests that while the company may be demonstrating strengths in certain areas, potential headwinds or uncertainties are also present. Investors and industry observers are closely examining these signals to gauge the company's future trajectory. The mixed fundamentals imply that the company is experiencing both positive and negative pressures, making its overall outlook a subject of ongoing debate and analysis. This could range from strong product demand in one sector being offset by challenges in another, or perhaps a robust revenue stream facing increasing operational costs or competitive pressures. The cautionary signal itself is a key takeaway. In the fast-paced world of stock markets, such signals are not to be ignored. They often arise from a combination of technical indicators, macroeconomic trends, and company-specific news. For Qualcomm, this could involve anything from shifts in consumer spending patterns affecting device sales to the broader economic climate impacting enterprise adoption of its technologies. Analysts are likely scrutinizing earnings reports, future guidance, and competitive positioning to understand the full scope of these mixed fundamentals. The emphasis on a cautionary signal suggests that while a significant downturn may not be imminent, prudence is advised. This means investors might be encouraged to adopt a more conservative approach, perhaps by diversifying their portfolios or closely monitoring specific performance metrics before making substantial commitments. Furthermore, the outlook implies a need for deeper investigation into Qualcomm's business segments. The company operates in diverse areas, including mobile technology, automotive, and IoT. Understanding the performance and prospects of each segment is crucial to forming a comprehensive view. A strong performance in one area might be masked by struggles in another, leading to an overall picture that is difficult to interpret without granular detail. The market's reaction, as indicated by the cautionary signal, underscores the importance of transparency and clear communication from the company regarding its strategic priorities and financial performance. It's a reminder that even established industry leaders are subject to the dynamic forces of the global economy and technological innovation. The public reaction and expert analysis are likely to focus on the balance between Qualcomm's established strengths and emerging challenges. Investors will be keen to see how the company plans to navigate this period of mixed signals. Analyst reports, like those mentioned in other updates, often provide differing perspectives, with some maintaining a positive outlook while others urge caution. This divergence highlights the uncertainty and the need for individual investors to conduct their own thorough due diligence. The narrative surrounding Qualcomm is evolving, and this latest analysis adds another layer of complexity to its ongoing story. But what happens when technology giants forge alliances to conquer new frontiers? We're about to explore a groundbreaking partnership set to redefine an entire industry. Railway communications get a 5G boost. A pivotal collaboration is set to usher in a new era of high-speed, reliable communication for European railways. This partnership is not just about upgrading technology. It's about enhancing safety, efficiency, and the overall passenger experience across critical transportation networks. By integrating cutting-edge 5G capabilities into the heart of railway operations, this initiative promises to pave the way for a more connected and responsive future for rail travel. Kontron, a key player in embedded computing technology, has officially partnered with Qualcomm Technologies to develop a next-generation 5G FRMCS, Future Railway Mobile Communication System, PC3 modem. This initiative, specifically for the MORANE-2 project, aims to significantly enhance railway communications across Europe. The collaboration is designed to establish a robust 5G standard that can meet the demanding operational communication needs of rail organizations throughout the continent and potentially on a global scale. This move signifies a major step forward in modernizing rail infrastructure, transitioning from older communication systems to a more advanced and capable 5G network. The core of this partnership lies in Kontron's responsibility for the design and development of the 5G FRMCS modem. A critical aspect of this role is ensuring the modem meets the stringent ruggedness standards required for railway compliance. This means the device must be built to withstand the harsh environmental conditions and operational demands typical of railway operations, including vibrations, temperature fluctuations, and potential interference. To achieve this, Kontron will leverage Qualcomm's advanced Snapdragon X72 5G modem RF system. This system is engineered to deliver superior performance, enhanced reliability, and improved energy efficiency, making it an ideal foundation for a mission-critical communication solution in the railway sector. Hans Niederhauser, CEO of Kontron, expressed his enthusiasm for the partnership, stating, "We are excited to partner with Qualcomm Technologies to bring the power of 5G to the railway sector." The Snapdragon X72 5G modem RF system offers the performance and resilience needed for MORANE-2. Together, we are setting a new benchmark for railway communications. This sentiment is echoed by Enrico Salvatori, President and Senior Vice President of Qualcomm Europe, who remarked, "We are pleased to announce this 5G FRMCS modem collaboration with Kontron, an important development in the transformation of European railway systems through enhanced connectivity." Like all Qualcomm modems, the Snapdragon X72 5G modem RF system is engineered for exceptional performance, reliability, and efficiency, making it an ideal solution for rail operations. The new 5G FRMCS modem will be specifically designed to support dedicated 5G railway communication frequency bands. These include N100 900 MHz FDD, BW5 MHz, and N1 1900 MHz TDD, BW 10 MHz, alongside the public N28 frequency band. This targeted approach ensures optimized performance and compatibility within the railway communication ecosystem. Kontron anticipates that this advanced modem will facilitate secure, high-speed, and significantly more dependable communication across European rail networks. The benefits extend beyond operational efficiency, promising to enhance passenger services through improved connectivity and data capabilities. This development follows Kontron Transportation's recent multi-million-euro service contract with Société Nationale des Chemins de Fer Française, SNCF. This contract underscores Kontron's established expertise in developing critical communication systems, particularly as the rail sector undergoes a transition from the older global system for mobile communication, railway (GSMR) standard to the more advanced FRMCS. The partnership with Qualcomm is a clear indicator of the industry's direction and the growing demand for sophisticated, reliable, and future-proof communication solutions in the railway domain. When major investors adjust their positions, it often signals underlying market sentiment. We're now turning our attention to the latest shifts in holdings for a prominent tech company. Investor confidence shifts amidst market activity. Recent filings reveal significant adjustments in how institutional investors are positioning themselves concerning Qualcomm Incorporated. While one major fund has notably decreased its stake, the broader landscape shows a dynamic interplay of buying and selling activity from various market participants, indicating a complex and evolving investor sentiment toward the technology giant. Alliancebernstein L.P. has recently reduced its holdings in Qualcomm Incorporated, shedding 1,056,829 shares during the first quarter. This move resulted in the fund owning 10,143,202 shares, representing approximately 0.92% of the company's stock, valued at a substantial $1,558,097,000 at the time of its latest SEC filing. This reduction by a significant investor warrants attention, as it can sometimes be interpreted as a signal of cautiousness or a rebalancing of portfolio strategies. However, the narrative is far from one-sided. A diverse array of other institutional investors and hedge funds have also been actively managing their stakes in Qualcomm. For instance, Atlantic Edge Private Wealth Management, LLC, increased its position by a remarkable 70%, acquiring an additional 70 shares to hold a total of 170 shares, valued at $26,000. Similarly, Vermilion and White Wealth Management Group, LLC, saw a significant boost in its investment, growing its stake by 122.4% through the purchase of 93 additional shares, now owning 169 shares worth approximately $26,000. New positions have also been established. WFA Asset Management Corp. Initiated a new position valued at around $27,000, while Sunbeam Capital Management, LLC, acquired a stake worth approximately $29,000 in the fourth quarter. Mascagni Wealth Management, Inc. also entered the picture by buying a new position valued at approximately $30,000 in the same quarter. These inflows suggest sustained interest and confidence from certain segments of the investment community. Despite these additions, it's noted that hedge funds and other institutional investors collectively hold a significant 74.35% of the company's stock, underscoring their substantial influence on Qualcomm's market performance. Market analysts have also weighed in with varied perspectives. Recent reports show a range of ratings, from upgrades to holds and even a downgrade. Arete upgraded Qualcomm shares from a neutral to a buy rating with a price objective of $200. Rosenblatt Securities reiterated a buy rating with a $225 price target. Conversely, Wall Street Zen downgraded the stock from buy to hold, while Citigroup reaffirmed a hold rating. UBS Group adjusted its target price upwards from $145 to $165, maintaining a neutral rating. This spectrum of analyst opinions, one strong buy, 12 buys, 10 holds, and 1 sell, contributes to a consensus rating of moderate buy with an average price target of $182.82, according to Qualcomm Pulse data. This indicates a general but not unanimous optimism among analysts. Further insights come from insider transactions. CFO Akesh J. Palkiwala sold 3,333 shares for approximately $522,814, reducing his direct holdings. Similarly, insider Heather S. Ace sold 1,600 shares for around $234,240. While these sales might appear concerning, they represent a small fraction of the overall insider holdings, which collectively amount to 0.08% of the company's stock. These transactions, coupled with the quarterly dividend of 89 cents per share, paint a picture of a company actively managed and financially stable, albeit with ongoing shifts in investor and insider sentiment. Even as investor strategies evolve, significant corporate realignments can be underway. We're now turning to an update that suggests major internal shifts driven by powerful external forces. AI-driven restructuring signals strategic pivot. In a move that underscores the transformative impact of artificial intelligence, Qualcomm Incorporated is reportedly undergoing a significant restructuring. This strategic realignment, influenced by AI advancements and ongoing valuation assessments, signals a proactive approach to navigating the evolving technological landscape and optimizing its market position. The company's stock experienced a notable decline of 0.94%, accompanied by a substantial trading volume of $960 million, placing it as the 81st ranked in volume. This financial activity, while showing a short-term dip, is contextualized by broader market trends and internal strategic adjustments. The emphasis on AI-driven restructuring suggests that Qualcomm is looking to harness the power of artificial intelligence not just in its products, but also in its operational strategies and organizational design. This could involve streamlining processes, enhancing research and development efforts, and potentially reallocating resources to capitalize on AI-related opportunities. The context of valuation uncertainty further adds to the significance of these changes. In a market where technology valuations can be highly dynamic, especially with the rise of AI, companies are under pressure to demonstrate clear growth trajectories and innovative capabilities. Qualcomm's restructuring efforts are likely aimed at solidifying its value proposition and ensuring its continued leadership in a competitive environment. This might involve focusing on high-growth areas within AI, such as AI at the edge, advanced driver-assistance systems, ADAS, and sophisticated AI processing for mobile devices and IoT applications. The details of the restructuring are still emerging, but the underlying drivers are clear: the pervasive influence of AI and the need for continuous adaptation in the tech industry. Companies that effectively integrate AI into their core operations and product development are poised for significant growth. For Qualcomm, a leader in mobile chip technology, this transition is crucial for maintaining its competitive edge. The company's ability to leverage AI for internal efficiencies and to develop next-generation AI-powered solutions will be key factors in its future success. This strategic pivot is also happening amidst ongoing market analysis and investor scrutiny. While the specific details of the restructuring remain internal, the market's reaction, including stock performance and trading volume, provides a public barometer of sentiment. Analysts and investors will be keenly observing how these changes impact Qualcomm's financial performance, its innovation pipeline, and its overall market standing. The success of this AI-driven restructuring could redefine the company's trajectory and solidify its role in the future of technology. The implications extend beyond Qualcomm itself, potentially influencing the broader semiconductor and technology sectors. As major players like Qualcomm adapt to the AI revolution, their strategies can set precedents and drive innovation across the industry. The market is watching closely to see how these organizational shifts translate into tangible results and sustained growth in an increasingly AI-centric world. That's a wrap on our top stories for today. Stay tuned for a quick recap and your essential calls to action. That's a wrap on our top stories for today. We've seen market signals advising caution for Qualcomm's outlook, a major 5G railway communication partnership between Kontron and Qualcomm, shifts in investor holdings impacting Qualcomm stock, and hints of an AI-driven restructuring within the company. Don't miss out on any future updates. Make sure to like this video, subscribe to Qualcomm Pulse for your essential tech and market insights, hit that notification bell so you're always in the loop, and share your thoughts in the comments below. For more exclusive content and real-time analysis, follow us on all our social media channels. Your engagement keeps us going.